You have $4,200 in a savings account. Every 2 weeks, your paycheck arrives, you spend most of it, and you set up an automatic transfer of $200 to a separate account. You find a high-yield account offering 4.5% APY. At the end of the year, your account has earned exactly $89 in interest. You decide to move further. You open a brokerage account, put $500 into an S&P 500 index fund, and turn on automatic dividend reinvestment. This graph represents the new rule you're following. In month 1, you have $1.40 in gains. Because of the automatic reinvestment, that payout immediately buys more shares, increasing your principal without you needing to touch the phone. The actual dollar amounts at this stage are small, but the mechanism is now running. You see every invested dollar as something that clones itself annually rather than something to be spent. You start optimizing. You max out your Roth IRA at $7,000 a year for tax-free growth and switch to funds with a 0.03% expense ratio to keep your capital from leaking into management fees. The math of compounding is front-loaded. Building the first $100,000 is a slow process, taking 8 years. Once established, intervals shrink. The second $100,000 takes 4 years. The third takes 2.5. The curve steepens as interest takes over. This phase is invisible to the outside world. When the market drops 19% and you lose $76,000 on paper, you do not panic. You add another $600 and wait. Reaching this level is the result of emotional detachment. You have built a machine that accelerates on its own, provided you refuse to interfere with the math during market cycles. When your net worth passes $1.2 million, your legal status changes. Under SEC definitions, you are an accredited investor, which grants you access to the private market. You can now enter private credit funds. These often require a $50,000 minimum commitment and a 5-year lockup where you cannot withdraw your money. This scale shows the illiquidity premium. In exchange for giving up the ability to cash out for 5 years, you are paid higher yields, often 12% or more, as compensation for that lack of flexibility. Your portfolio now generates wealth through 4 distinct channels: equity dividends, private credit distributions, real estate yields, and depreciation offsets. You have moved from a retail investor to a capital allocator. You are playing on a financial board that was previously inaccessible due to the high capital requirements for entry. At the $5 million level, you move away from individual wealth management to a family office structure. This architecture is designed for tax efficiency. By using charitable remainder trusts and Delaware holding structures, a family office can lower an effective tax rate to near 11% while remaining fully compliant. The math becomes generational. If you seed a child's account with $150,000 at birth, that account grows to over $510,000 by the time they graduate, without them ever making a deposit. This system provides access to pre-IPO shares and hedge funds that are closed to outside capital, creating a segregated financial ecosystem built to protect principal over decades. At this scale, compound interest functions as a structural tool. It builds wealth that sustains itself for people who haven't been born yet. By the time you reach $40 million, capital creates proximity to power. You sit on private company boards and co-sponsor venture funds, accessing networks that are closed to the public. This structural insulation allows you to treat a 30% market crash as a buying event. While retail investors sell at the bottom, your liquidity allows you to absorb those assets. At $200 million, the individual is replaced by a legal architecture. Assets sit in a trust or foundation. It earns 7% annually, distributing 5%. The remaining 2% re-enters the principal, growing the structure indefinitely without your attention. A 23-year-old walks into a glass tower today and opens his first brokerage account. He sets up a $200 automatic transfer, focusing on his own retirement and financial security. He is starting a process that functions independently of his attention. The compounding has already begun for his great-grandchildren, and it will continue as a structure long after he is gone.